Hello, this is Steve with the Free Bullion Investment Guide. Today is March 30th, and I'm doing a review and outlook for the US dollar. This is the US dollar's 4-hour chart. And in review of last week's video, I'd shown you this rising wedge pattern in the US dollar's price chart. It is a negative pattern, and early in the week, the dollar did break it. The reason behind the dollar's fall early in the week was because of the Consumer Confidence Index came out. And it came out much lower than expected. It came out by nearly 9 points lower than economists expected, and that had hurt the dollar's move, and it fell in price. However, excuse the pop-ups, on Wednesday there was a report that China and the U.S., the trade talks is what I was trying to say, sounded like there was making some breakthrough. It says China makes unprecedented proposals on tech transfers and trade challenges. So there was there were other reports. This one was by CNBC, but there were other reports that some inroads were being made between the two sides on their trade talks. So that helped the dollar move higher. And then it clearly passed up through the 96.80 level. It tested the 97 level, and then it popped up a little higher on Thursday, and it stayed up on Friday. It basically just consolidated on Friday. But the move up on Thursday was because the GDP report came out as expected. They had forecasted 2.2%, and that's what the report showed. So that helped the dollar also move higher. Now, it does look like it's getting a little tall, a little long in the tooth, and might be cresting as far as the MACD is showing and the RSI. So we could see it continue to move higher. It really depends on some economic reports. Really, it depends on what we hear out of the trade deal, I believe. And also, late next week, we have the job report come out. So I'm just going to expand this rising wedge. It was broken when it was drawn at this bottom trend line here, but now we can just expand it a little bit longer with last week's movement, and it could test still the 97.70 level. I kind of wouldn't be surprised if it tests the 97.45 level, but really what I expect is for it to be broken next week and more of the same. That's the reason why I'm spanning out here, because what we've been seeing for the past, it looks like since January, is up, down, up, down, up, down. It's going kind of in a upwards movement. I mean, we did have a low lower than this low here. However, it's still more of up-down patterns. And I think that the market really wants to hear what's going to happen with the trade war as far as which way the dollar is going to move, which way they're going to trade the dollar before they decide. And really what I think is that if we get a deal between the two sides, U.S. and China, on the trade war, then we'll likely see the dollar move higher. But if we don't, then we'll likely see the dollar move lower. I hear a lot in the financial media saying, last couple of days I've been hearing that they're saying, well, if we get a trade deal, don't expect anything great out of it. So that basically tells me that maybe they're hearing good things, because really the financial media doesn't want anything good out of this economy simply because of who's in the White House. And if they see a deal on the horizon, they're not going to be telling investors to look for nothing great on the horizon. So we'll really have to see what happens, but if we do get a deal, then it's likely that we'll see the dollar rise, or if we get some good news. But again, the MACD does look like it's cresting, as well as the RSI, so we'll likely get some more up-down movement until we do hear one way or the other. So I thank you for your time. Take care, and God bless.